Welcome back to Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Landon Swan, co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here.
All right, so we're talking Visa. They've got some Department of Justice sniffing around their debit card transaction business at this point. But, this is kind of reflective. We've seen retail sales data positive, right? People are still traveling, spending money. That seems to be like good news for Visa, right? Do you have the data to back it up?
Yeah, I mean, people are still spending. And what's kind of interesting is, when you look at, what's happened with interest rates, credit, obviously that's going up. That's going to put a pinch on consumers. But inflation's really, it's causing everything to be more expensive. And the data that we're seeing is that lower and middle class consumers are still spending more, even though their dollar's not going as far. They don't have the income to match the spending, which of course means that they're spending more on their credit cards. So, that's an interesting element. We've seen that credit card applications and accounts have gone up like 50% over the last 10 years, whereas like auto loans and other lines of credit are basically the same. So that's a bit of a, obviously that's a plus for Visa. And they're actually, you got this chart here showing the debit card increase. They're really getting into the debit card game. They process about 60% of the 100 billion debit card transactions on an annual basis. So that is huge for them. And they actually have, lack of a better word, punishments for merchants and banks that don't go, kind of play by their rules, which is, I think, what, the Department of Justice is looking into. But I will say that investors have largely kind of shrugged off that investigation. It doesn't seem to be like a big concern. And so, one thing that they're probably looking at is that they missed the revenues last quarter, barely. They came in at 8.9 instead of 8.92. But overall, I think that the company's doing really well, and they're sort of the default when it comes to credit card processing. And, the data is in their favor. And even if interest rates drop, it's kind of like you're going to win one way or the other with Visa. If interest rates drop and they don't earn as much on those balances, people are more likely to spend more because it's more attractive. So what we did see is that even with interest rates going up, people really didn't cut back. They just kind of cut back spending their cash, and instead they're spending credit, which of course is going to be good for the company.
Yeah, unlike American Express, though, Visa really doesn't carry balances. They are just the conduit for the swiping, and they have a very asset light model, but they could be hurt by recessionary fears, but it doesn't look like those are coming. So what do you think the risk is? You just said 60% of the transactions they do. Well, that's not a monopoly. That's not anti-competition. 60% is a good solid number, but it's not a monopoly. Why are they constantly in trouble, even though, they are just, they are the swiper. They make money per swipe. They don't make money on interest rates. They don't do that. Why did this happen? How do I say this nicely? I need like a better phrase for why is this happening to them when clearly it doesn't happen.
Right. Well, I think 60% is big enough that can draw attention, obviously, but it's not a monopoly. You can, you've got MasterCard, you got Amex, and I guess you can go Discover too. So there's options out there.
Yeah.
But you're right. I think it's just whether or not the consumer is swiping the card. And, we would think, I would have thought that inflation and reduced buying power relative to what things are costing would decrease spending, but really that's not the case. And so I think that's kind of the big takeaway. And yeah, you get into a strong recession. I think obviously there's going to be less transactions, but there was a pullback. There was an economic pullback. We were struggling for a little bit. We can argue on which side of that we're at right now, but Visa came through basically just fine. So I'm actually pretty bullish on this company. It's not like a high growth company. I don't expect this to double or triple over the next few years, but I think it's a safe place to put your money where it's it's an easy middleman company where they're just going to make money no matter what the economy does, as long as it doesn't completely tank. And even a little bit of a pullback, as we saw, didn't hurt them. So I think they're in a very strong position here.
Yeah, Landon, your other chart, you got the global most valuable brands. I think that's key because if you look at the growth rates here, I mean, Visa's is up, what, 12%? Maybe it's already elevated enough where maybe those growth rates start to get a little bit tougher to kind of increase here. But with the Department of Justice, with the stock just below all-time highs, but they don't have the risk that, you know, American Express and some of the others do because of the asset-light model. I mean, what's your take here and earnings score going into this report? Because I still think the bar is pretty high on this one. It just doesn't seem like the consumer's pulling back on spending at all, even though credit card balances are starting to really rise.
Right, agreed. And just, you know, this is obviously it's not market caps on this chart. It's brand value, which is kind of measured by how much value does the specific premium brand able to charge, and how much can they extract from their, you know, their brand name and their premium products. So, you know, sitting in between NVIDIA and Facebook is not a bad place to be for a company. I mean, that's, you know, 7 on the list. That's amazing. And by the way, when you get into antitrust, we didn't show it, but number 11 on this list is MasterCard. So it's tough to say monopoly when you got 7 and then 11, right? So that's pretty interesting. But when we look at the earnings score from negative 100 bearish, positive 100 bullish, we're to plus 26. So, you know, willing to take a bet. I agree that, you know, the stock's done well. It's got that, you know, it's got the Department of Justice kind of looming over it, but that's, I think, somewhat priced in. It is priced in, I think, to become not a big deal. So if it does go the wrong way, I think there's risk in that. But just if you can assume business as normal and the antitrust lawsuit doesn't turn into anything, then I think this is probably, you know, a safe place to put your money. And I would bet to the upside. Again, not a huge margin. This isn't a plus 50 or 60 score. This is a probably going to go up kind of score, but not willing to bet the farm on it. So plus 26 is where we're at. But overall, love the company, love the model. It's just taking a little bit each time. And you know, you pick out, you know, half a penny or a penny on 100 billion transactions, and you do a little bit more, 35 cents here. It's just an incredible business. I'd like to see more competition, but still, at 60%, there already is a lot of competition. So overall, slightly bullish going into this earnings report.
Yeah, and don't forget that I'm sure the guidance is going to be okay. You've seen some of the National Retail Federation numbers, Adobe Analytics, where expectations for holiday shopping is supposed to rise pretty significantly. So this is their best quarter. I'm sure they'll do okay. All right, great stuff as always, Landon. Appreciate it.
Thank you.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down Visa now.